Morning all. How are we all doing? How's everybody doing? Everybody had a good weekend, good Easter, good break? I thought we'd start off with John Wick this morning. I've got my my special bling on. Don't know if you can see it. I put my bling on this morning for John Wick land. Thought we'd start off with a bit of gold. Morning all. Morning David. Morning David. Morning David. How are we doing? So gold's going up and down with the price movements. Anyway, back to serious matters. How's everybody? All had good weekends? I've got to take this thing off. It's really heavy. It's a good bit of bling though, look. High quality that, you know. High quality bling that. $12.99 from Amazon. I'll leave that one on. Ah, dear. Been a long weekend. Morning, John. Right. Morning, Anna. So, where are we? What I'm going to do today, because it's been such a long break, is have a look at the news, see where we are. I'm not going to pay too much attention to the DAX open this morning. There's a big old gap available on the DAX. So, what the hell? Where's my pen gone? There it is. So there's a big old gap for the DAX this morning, potentially for a fill. So that might well go at the open. But I want to have a look through all the pairs today. We'll have a look at what's been happening with the news. We've got a fairly quiet news day today, so everything will just be moving off of normal price action today. Morning, Nuno. Morning, C Emma, as opposed to the land Emma. How are we doing? Morning, Derp. Yarp. Morning, Stevie. So, yeah, so basically gap fill potential this morning on the DAX. Nice little run down to there. See if that one gets filled. But I want to cover basically what's gone on over the last few days, really, and get caught up on everything. So, I'll just give you a quick rundown of what the EA's been up to. Obviously, I've been keeping an eye on everything over the bank holiday weekend because I wasn't here Friday, wasn't here Monday. Morning, Diamond. So EA's been running, obviously, just trading. So the VPS has been running, obviously, with the EA on with the different strategies. So this is the ADR reversals. ADR reversals did, what's today? Today is Tuesday, isn't it? So yesterday did 0.7%. Friday it did 0.37%. Virtually flat. Aussie New Zealand is the only trade on there. So it's done 7% this month, nearly 8%. H1 mean reversion has done 1% today, 0.5%-ish yesterday, 0.75% on Friday, nearly 10% already this month on that one. So that's doing well. You've got 2% of drawdown. It's going to bank some more this morning by the looks of things. Obviously, CAD's going to get banked in a minute by the look of it. H4. We've got 3 trades on an H4. Not a lot of activity on that one either. Yesterday did 0.5%. Friday was flat. Well, I got a feeling it was virtually flat on Friday. Swiss yen might be the only thing, actually. When did it get into that? Yesterday. So no, it wasn't even in that. So yeah, I think it was probably flat actually on Friday, which is why it didn't bank anything. It didn't have any trades on. There's no H4 RSI extensions on Thursday. I don't think it all calmed down, didn't it? So flat there. And H1 hedge sitting in 4% of drawdown. It's did 1.2% yesterday and 0.5% is on Friday. So that's banked 7% as well. So all the EA's been running fine, nothing's in drawdown. Euro pound is getting a bit close on the H1, and Swiss yen is getting a bit close as well to having to have a quick look at those. I say getting close, it's 1%. It's not a lot, is it? But drawdown control is being done on it. But big, strong push, 3-day push on Swiss yen, and it's still pushing up again this morning. So we'll have a look at all that in a minute. News-wise, morning, Joaquin. We have obviously it's bank holiday yesterday. There's no news today. We got Mester speaking at 11 o'clock this evening. So that's pretty much tomorrow. Don't know why that's on today. But yeah, so there's no news today. So literally all we're going to get today is market movement. So whatever's going to be pushing today is going to be pushing today just because of the bank holiday. So bear in mind today, it's the first day back from a 2-day bank holiday for Europe and Australasia. And obviously the US has been pretty quiet as well. So today's the first proper day where they're going to be driving orders through the market. So over the weekend, when you have a long weekend, like a bank holiday weekend like this, you tend to get a lot of orders come in, which need to be processed, and they will all get processed today. So we might well get a big volatile day today and a lot of movement, which isn't necessarily directional based. It's just a case that they need to get orders executed. So we'll see what happens today. It might be a busy one. So week coming up, tomorrow we've got CPI for the US dollar. So the inflation figures for the US dollar coming out. Obviously, that's one of the most important key drivers for inflation and for interest rates. Interest rates, they've said they are definitely going to be putting up in May. I say definitely, 80% sure now we're going to get an increase on the US in May. So what happens with those will obviously have a direct impact on whether that decision gets made or not. So we need to pay attention to those. We get some good movement off of that tomorrow. We've got Bailey speaking tomorrow afternoon, and then we've got the CAD rates tomorrow afternoon. So the Canadians are looking to do a 4.5. So if we have a quick look at the fundamentals, on one for that. So the CAD is 4.5. Last rate change was 4.5. So they didn't increase last time. So this is their second month, basically, with no interest rate increases as being forecast. We'll have the press conference at 4 o'clock as well tomorrow after that. So that will be movement on the CAD potentially. When we start getting these phrases in interest rates, it means that we've hit basically what we consider to be the peak for the interest rates, and then it starts to come down. So potentially weakness ahead for the CAD. However, oil is going up, which will be helping the CAD. So a little bit of a mixed bag on that. It's difficult to call the CAD at the moment as long or short long term. So we'll have a look at everything over the weekend that's coming on COT on that as well in a minute. We've got the bond auctions tomorrow evening, and then we've got FOMC. So it's FOMC tomorrow evening at 7, and then we've got Bailey speaking again at 8:15. So we've got Bailey speaking twice tomorrow. Global Financial System, that's an online event. What's tomorrow evening? International Monetary Fund Spring Meeting in Washington. Okay. So that's right. So the IMF, he's more likely to say a statement of some description to the IMF. So that would be probably the most important one tomorrow to look at. Aussie dollar unemployment on Thursday, GDP for the pound on Thursday. We've got PPIs for the US dollar on Thursday, 1:30 in the afternoon. Then we've got Macklem speaking. That probably won't do anything because obviously we've had the rates and the press conference the day before. So Thursday, whatever he says on Thursday is not going to be as impactful as what he said about the rate statement that comes out on Wednesday. And then Friday, we've got retail. And then we've got University of Michigan in the afternoon. So busy week. However, today is flat. So today I would not pay too much attention to price movement today. If we get a load of big ADR moves today, it's not necessarily because the market suddenly wants to take off in a direction. It's because they've got a load of order executions to do. What's going to happen with market direction is all going to be dictated by Wednesday to Friday this week. So busy old week coming up. I had a quick flick through all of the news from the weekend. So the main points I've taken out of the weekend's news is that a rate hike, it's unclear whether there's going to be another rate hike for the euro. I think there probably will be, but this is the important bit. Rate cuts this year are almost impossible. Basically, they're not going to be dropping interest rates this year. Market's just open, by the way. So we are starting to head down for that gap fill. So yeah, so no interest rate cuts this year for the euro, which is kind of as expected, but may also not start to put up as well, which is key because that will mean that the euro might not necessarily strengthen anymore. We'll have a look at that in a minute. Other than that, over the weekend, the only other thing I found interesting was to do with the US rates, the fact that we've gone into greed as well. So potentially positive indices. We need to watch today and see what happens. We're in greed now, so we may well see the indices starting to rise. 80%, where was it? There you go. Fed swaps show greater than 80% odds of a 25 basis point rate in hike in May. So looks like we're going up in May. So US, we're at 5. We were looking at the terminal rate being 5.25 for the US. So that looks like it's probably on the cards now. Euro, we should be looking somewhere around about the 4, potentially, maybe 1 or 2 more rate hikes there. So if that becomes their terminal rate, they need to make sure that this continues to drop at that rate. Yeah, so the Eurozone, the reason the Europeans are potentially not looking at putting interest rates up any higher is because their inflation is coming down fast. So they may not need to go much higher than that. So the next CPI figures we get for the euro are going to be critical. CPI tomorrow for the US dollar is also going to be critical. So we did have a drop of 0.4, so almost 0.5% drop last time we had the CPI figures. So we need to look at this tomorrow and see if that continues to come down. That's going to be pretty good for the US. So just pushing up on the DAX. So that's all I got out of the weekend, really, apart from loads of Easter eggs. There was nothing else from the other zones. So that's pretty much it. There's your news. Morning, Virginia. Morning, Dances. Ohio Lee-chan. Ohio dances with wolves. Right. So the other thing, funded accounts, for those that have been, oh, great. Morning, Ozzy. Morning, John. Bitcoin, don't trade Bitcoin in here. Morning, Outro. Morning, Danny. So the funded accounts that I've been running with Fidelcrest, just to give you an update on those. I haven't been trading much over the weekend. Obviously, Friday and Monday, I didn't really take many positions. So 3.5% on the one of them. This one is sitting in drawdown on this pound New Zealand at the moment. So trying to deal with the pound New Zealand. I took another position on this yesterday. Didn't do anything much on Friday at all. So let me just go to that. So yeah, so got a couple of positions in drawdown on that, sitting in 2% drawdown. Got 3.5% banked. So I need this pound New Zealand to come down basically today. That'd be nice. The other account, which is that one, is up to 2% now. Banked a little bit on that today. Main issue is the Dow. So they got into that Dow trade. I've just taken another one this morning on the Dow. As we had a quite a weird day yesterday. I went out yesterday most of the day. Morning, it's time. How are you? Morning, Seymour. I noticed on your recent video you didn't mention the OLB strategy. On my recent video? No, that was a position trading. That's about the market reverse alerts. Yeah, you mean the results? Yeah, no, I don't do ORB. ORB is just doing what it's doing, however you've got it set up. Morning, Kennedy. So yeah, sorry. This account, yeah. So the Dow, I had an exit on this. I went out yesterday. I had an exit on this it's about 0.2%, and I thought that's a big drop. I'll have a look at that tomorrow morning. And obviously, it screamed to the upside yesterday. So unfortunately, it's gone into drawdown. So I should have taken that off yesterday. I wasn't looking at the charts. If I had looked at the charts, I would have gone, yeah, need to get out, but I didn't. So unfortunately, I'm up in drawdown on this. So if this comes down today or this account blows, not a lot I can do about it much. Well, I won't blow, but I will be scaling out of around about $1,250. So it was basically bring it back to reset. So not to reset, but back to the scratch. So all of these have got stops on them. Every position's got a stop on it. So this one here is there. That one is there, that one is there, that one is there, and so on and so forth. So every one of them is scaling out with around about a point, $250 to $300 loss. So Dow, DAX, NASDAQ, S&P, everything today, if you don't mind, if you could just pop down and get me out of this, I'd like to get out of that position, which would be nice. But this is the account I'm really focusing on today. Because I've only got 1.5% to go to get this one across the line. So hopefully we'll get some decent movement on that, but we'll see. Nuno, you trade on the funded accounts manually or with the EA? With the EA when I can, but I can't on Fidelcrest. Fidelcrest don't allow EAs. So I have to trade manually. So basically all I'm doing on the Fidelcrest account is what I used to do before I built the EA, which was trade using the dashboards. So watching out for ADRs, watching out for RSI extensions and getting in. So yeah, doing it manually. I have to. I haven't got a choice on that account. The reason I like Fidelcrest is because they've only got a 5% target. So it's a lot easier to hit the target. Although I've been running those accounts now for 7 days or something. When did I start those? Uh, 31st of March, yeah. So first trade was closed on the 31st. So 10 days, about 7 trading days or so. So yeah, I'll pass when I pass, or I'll blow it when it blows. Now I can do about it. Up to the market. Yarp. On Friday, spreads raised to 100 pips in some pairs. Doesn't this have a negative effect on the profits? Yep. If you've got stops in place, you will be stopped out. Nothing you do. I spoke to someone in the Telegram group about it this morning, but I didn't speak to someone. I messaged in the Telegram group. Someone was saying, I think it was John. John, you're in here, aren't you? About spreads on Fidelcrest. It's brokers. It's not Fidelcrest. It's not Robo Forex. It's not anybody. It's spreads, basically. If somebody puts a large order in the market and there is no liquidity, the spread will go and find a fill. Read your contract with your broker. You sign a contract with your broker. If you read the small print, you sign a contract with your broker that says, I want you to fill my order for me. Yeah. You select the price you would like to fill the order. Yeah, this is a very important point, because if ever you phone up your broker and say, oi, you spread me and stop me out, he'll turn around and go, yeah, and you'll go, well, that's not right. And you go, well, read the small print. You signed a contract with me that says, I would like you to fill my order at the best possible price you can achieve for me, please. If the best possible price is 150 pips away because there's no liquidity in the market, that's exactly what your broker will do, because you've asked him to. Yeah. So go and read the contracts. It's not any broker in specific that, and some brokers are better and worse at this, obviously, at swap spreading, but same with prop firms. Whoever their liquidity, their tier one liquidity provider is, will provide their liquidity. If their liquidity is not there and you have an order in the market and a load of people place orders in the market or have orders that say, close my position at 10 p.m. on the evening every night, it will close all those orders. And if those orders are the opposite side of your order and they need to go and fill those orders, they will spread it out. It's just the way it works. Nothing you can do about it, which is why I don't use stop losses. If you use a stop loss, you will get stopped out on spreads all the time. I've got some examples actually in here, I think. I'm just trying to think of some pairs that I've been stopped out on recently, which are nothing to do with my orders that were placed. I've been filled at some very odd levels, but it's just what happens. You will get, and the same with drawdown control. Yeah, So the EA will do, I'm just trying to think, what have I drawdown control done on? Pound New Zealand. There's some that I've had drawdown control done on, and it's been at a very odd sort of level. Can't find any examples, obviously, because I want an example. I can't find one. But yeah, anyway, so I've been, so for example, let's say that sell order had to do drawdown control. I might get a fill there on drawdown control. Yeah. And basically what it is the market pushing up to there and the spread here widening to that extent. The EA detects that the bid or the ask is X distance away from the entry, and it will do drawdown control up there, but the price will never get anywhere near it. Nothing you can do. I've asked the EA to get me out if it moves 3/4 of an ADR against me. Therefore, if the spread is 3/4 away an ADR against me and price is only half an ADR against me, the EA will execute an order. It's just life. You just got to accept it, unfortunately. But anyway, normally use 0.1 lot size per 1,000 US dollars. If you want to, Nuno, yeah, that's what I would recommend as if you're going to position trade initially. But if you're going to use the EA will do all the calculations for you. But when you're starting, when you're practicing position trading, yeah, 0.01 per $1,000 as a starting point is a good starting point to use. But really what you should do is calculate the risk correctly. But Diamond makes me wonder if we can detect when the spread is uncharacteristically high and avoid closing the order in that case. Yeah, you can do. There's a spread filter in the EA, so the EA will only trade on spread filter. So if you want to use, the spread filter, it's down there, and you can say max spread, and it will only trade if the spread is within that range. I just don't bother with it. It's so it happens every now and again, and in the grand scheme of things, it's not that much of a problem. I don't think anyway. But right, so DAX, your 5-minute opening range break is there. It's long at the moment, but it's not really going anywhere. So we'll have a look at all the FX pairs. Right. So I'm going to run through everything today. We'll start off with the ADRs, and then we'll have a quick look at the RSIs. But I want to run through every pair and just re-familiarize myself with exactly where we are and what's going on. How many people have we got in here? 61. Thumbs up. Get some thumbs up. We haven't got enough people in here. We're dropping. We used to have like 150 people in here. We've got 60 people in here. Something's going wrong. The algorithm doesn't like me anymore. I'm short in the DAX, so it's certain to go long. I hope not. I'm short as well on the Dow. So down the DAX, obviously, we'll do pretty much the same thing. So I'm really, really hoping it comes down today, because I really need to get out of that, not this one, the other account, the other position. And Pound New Zealand as well. It's been a bit of a pain in the backside. Ugh, I'm going to stop out on it. Look. There goes $500. That's what happens when you use stop losses. Got to use them though. It's a funded account. Right, so Aussie New Zealand ADR. So first ADR of the day is Aussie New Zealand. Not sure about that. Yeah, no, that's not an ADR. That's just, there you go. This is exactly what we were just speaking about. Yeah, this is not ADR. This is a broker. That's 35 pips. ADR, half an ADR on this is 37 pips. That whole candle there is 39 pips. Yeah, this is not price action. This is a broker spreading. So nice $1 profit in DAX, Altro. Good job. Hey, $1 profit is better than $1 loss. So yeah, so nice moves up on the Aussie New Zealand, although I wouldn't say that's an ADR. I would say that has moved 58 pips today, and ADR is 74. So again, whenever you're looking at these ADRs, yeah, especially with the New Zealand dollar pairs, because those are the ones that tend to get spread out a lot, just watch and make sure, you know, this is why you eyeball these things. Make sure that is actually an ADR. Doesn't look like an ADR at the moment to me. So yeah, no ADRs, no weeklies, obviously, because it's Tuesday and we had very little movement yesterday, although we did have some ADRs yesterday. So there's nothing hits monthly ranges at the moment, so that's all flat. So there's not a great deal to look at there. Derp. Was funny. I was in shorts with New Zealand odd pairs since Thursday. Prices were nicely down on Friday, but due to big spreads, equity showed minus. How does the EA handle this? ADR target has reached, but minus. The ADR will do exactly what it's designed to do. It will get in when it's hit certain levels, and if the levels your broker is quoting you are different to what you see in a candlestick. The thing you've got to understand about candlesticks is candlesticks are a representation of price over time, where we've executed price. If the bid is there and the ask is there, yeah, and the spread is that wide, you will not get that print on a chart unless an order is executed there. Yeah. So the spread, however, is what EAs use. The bid and the ask are what EAs use to measure distance. So if the ask's up there or whatever, and you're down here, and that is one ADR, and you have said to the EA, at one ADR, close out a third of the position, it will do just that. If price is traded there on the last candlestick, but your broker is quoting there, the EA will take your broker quoted price. Has to. Because it has to fill you at the, you can't say, oh yeah, I know that one's up there, but take the bid instead. You can't do that. You can't execute at the bid. So you've got to, just take it on the chin. Yeah, it won't happen often. It will happen in light liquidity, like we've had over the weekend, which is why I don't trade at the weekends. But the EA will continue to trade at the weekends if you leave it on. But look at the other side of the coin. Yeah, you may have had a fill order bad over the weekend, but the EA for the hedging account banked 1.6%. The EA for mean reversion banked 0.5%. The EA for H1 banked 1.5%. ADR reversals banked 1.1%. Am I moaning about banking 5% while I've been off with the kids over the bank holiday weekend? It's just not worth bothering about. Don't worry about it. It happens, accept it. It's part of doing business. It's cost of doing business. Yeah. John, it wasn't a stop that took me out. They obviously took the low price of the spread market against me, and that triggered my daily threshold cutoff. Yeah, it will do. It will do. Morning, Blinded. Sammy, how are you? This is the first time you've been in here since I've had a webcam. You haven't been in here for ages. Morning, Andres. Yeah, I mean, this is the thing, John, right? Like this account here, yeah? Sitting in 2.37% of drawdown. If I was sitting, for example, in 4.6% of drawdown at the swap at sort of, 9:45 UK time, I'm in a big danger of blowing the account. Price will never trade at levels to blow the account, but if the spread spreads and the drawdown gets increased because of the spread, nothing you can do. Again, this is part of the problem with prop. This is why they have these restrictions in here. If they didn't have these restrictions in here, they wouldn't make as much money as they do out of evaluations. I was talking to a guy in forgot the name of it. One of the prop firms begins with an S. Hang on, I'm going to look it up. Wrong account. No, right account. Sorry, one sec. Anyway, it was one of the here it is. Which one was it? Surge Trader, right? So I got contacted, and this is mailer. I got contacted by I get contacted by brokers and all sorts of stuff all the time, wanting me to promote this, that, and the other. Credit Suisse bonds loses prompt Japan lawyers to look into brokers. There you go. They're investigating brokers. Yeah, so I was talking to this guy in Surge Trader because they wanted me to do all sorts of stuff with them. And I can't remember what was I talking about a minute ago. Hang on, I've completely lost track of what I was going to say. Oh yeah, so he sent me a document which has got all the statistics for Surge Trader in it, i.e. how much money they make out of evaluations, what they pay. So it was basically loads of statistics that could be used in marketing, right? And one of the statistics they gave was the affiliate payouts, because they were asking me to be an affiliate. And the affiliate payouts, their average affiliate payouts are $10,000 to $15,000 a month, right? So just think about that for a minute. You get paid 10 to 15% of all income generated as an affiliate for Surge Trader. They're paying their affiliates 10 to 15,000 a month. So what do you think they're actually making out of the evaluations if they're paying the affiliates 10 grand a month? Yeah. And we had this thing about my Forex funds, didn't we? My Forex funds make about 22 million a month in evaluation revenue. They don't pay anywhere near that. So they don't even pay 10 million out in payments to traders. So if they didn't put these rules into place where you've got this 5% daily drawdown limit and the spread didn't trigger those blown accounts, you wouldn't go back and buy another evaluation. Everything's geared against you in this industry. Your broker's geared against you. Your prop firms are geared against you. Every trade, every time you press the button, it's geared against you to make a loss, which is why 90% of traders lose 90% of the revenue in 90 days. Because the odds are completely against you. The second you start trading, you're on the back foot. And you always will be, regardless of whether you're prop, broker, or whatever. It's just the way it is. But you've just got to, after a while, you get beaten up by these things and you just accept them. I had one the other day, didn't I? Not the other day, a couple of months ago. We had a news trade. I think it was a Swiss yen or something I was trading. And I put a stop in the market for something like $250. And I got stopped out at $550. So I lost $300 more than my stop loss because the move went so fast. They couldn't fill the order, and I got slipped by whatever, half an ADR. Damn, lost another $300. There's nothing you can do. If I phone the broker up, they'll go, well, what do you mean? You told us to fill you at the best price. That's the best price we could get for you. All right. Just got to get on with it. Accept it. Part of life, unfortunately. As a trader, the cost of doing business is basically everything, which is why it's so hard. Morning, Andres. Indeed, blind Sammy. I haven't seen you before. Let's give Sammy a close up. Hi. There you go. That's me. Saw the stream and thought I'd come by and say hi. Hi. Morning, Neo. Right, let's get on with some analysis. Anyway, so that's enough about brokers and spreads and stuff. Just got to get on with it. Nothing you can do about it. Right, Aussie dollar yen. Let's look at the hourly RSI extension. So Aussie dollar yen, we are extended to the upside. So that's a good looking short opportunity. We have got this propulsion gap to the upside yet at ADR as well. We're just refilling this again, and we've got a downside target. Again, forget that. That's overnight. So we've got a downside target as well. So one or two things going to play out on this. We're either going to pop down to there and then back up into this, or we're going to fly up to there and then come back down and do that later. So that potentially might be a good little short. It's 40 pips. It's not even half an ADR, is it? So M5 reversal just had it this morning. Kind of missed that one. Fill down there, basically 53 pips away. So could get half an ADR out of it. So yeah, potential short. I'm just looking for shorts to take, basically, to try and I'm already short US dollar yen, so I've already got some yen exposure. I'll leave that for the minute. So yeah, potentially Aussie dollar yen, good extension to the upside, not quite up to the 75 extension, so it's over 70. So it's a decent RSI extension, not quite as high as I'd like it though. So that's extended. Aussie dollar, New Zealand dollar, we know we've just looked at the ADR on this, which isn't really an ADR because of the size of that wick. But it is extended on RSI as well. So again, we're looking for that pullback. Propulsion target is there. We've got this big propulsion target to the downside. However, to the upside, we've also got a target as well. So again, very difficult one, this one. Target down there, target up there. Obviously, this is a much closer target, so it would make sense to come up there and then pop back down there. This is a short. Yeah, so we're currently looking for new leg down, retest of that low. So it would make sense for them to come up before they go back down again. So if this one gets extended higher, i.e. we get 75.80 on this, I'll be getting in short on this one. So I want it to come up there really. 150 ADR, which isn't really 150 ADR, but up there basically, be looking for shorts on that one. Euro odd. Good downside targets on this. Just got out of this one this morning. So that was the RSI extension on Thursday last week. Obviously, you can see Friday, bank holiday. Now we're moving. Yeah, out, done, dusted. So that's extended just to the downside. What's the bias on the euro at the minute? It's pretty mixed, isn't it? So take these either way still, I would say at the moment. This bias scorecard, I'm getting to the point now where I'm thinking potentially now need to start setting directional bias on the EA and just looking at certain pairs being in one direction or the other. So US dollar CAD is one of the main ones. You see this is a +7 at the moment, US dollar CAD. We are -1 on retail. So when we flick to potentially +2 on retail, this goes up to a +10. +10 is pretty strong buy, isn't it? We don't really want to be shorting US dollar CAD. So I'm thinking US dollar CAD is one of those pairs now which should be maybe looking to flick to long only on the EA. US dollar yen potentially as well. Euro yen and all these others you see which are +6s at the moment. Those are all +2 for retail. So those will only ever drop down to +4s or lower. So those not so much. But US dollar CAD, can't quite see that, can you? Because my head's over the way. But yeah, US dollar CAD and US dollar yen, potentially thinking maybe those we should be looking longs only. Swiss yen as well, that's a +2. There's no COP bias on that though, however. So I would say this is being thrown out a little bit by the fundamentals, because obviously everything fundamentally is stronger than the yen because yen's got negative interest rates. So because there's no COP bias on that, I think basically that one I would probably leave as both directions. But those two definitely, I think maybe it's now we should be looking at just longing them. Aussie dollar, US dollar, that is at maximum at the moment as a -8. So again, Aussie US probably just shorts. New Zealand US is a -6. So when retail sentiment flips back the other way, that becomes a -4. And again, same with that one. Pound US actually, no, Pound US is potentially another 3 on that. So that's a -9. So yeah, so GU, AU, probably look at short only now. And UJ and UC, long only. Because obviously COT has changed over the weekend. We're getting to the point now where the fundamentals are shifting to such a point where we may well start to get some squeezes on these. So we need to be a little bit careful. So I'm going to do a little bit more analysis on those, but just be a little bit careful with those. None of those are obviously lit up today. Swiss yen we've got extended on the 4 hour. CAD yen extended to the upside. Entry for me was yesterday there. So got out of the long position yesterday and flipped short, came up, filled the propulsion gap, now got propulsion gap target to the downside, so looking to come back down there. So that's nicely extended, but that is a 4 hour extension. Yeah, so extended on the 4 hour. We were also extended on the hourly. Looking to get, there's multiple shorts on this already, isn't there? So I've got 3 positions on this now. Okay. So yeah, big propulsion gap target down there on the 4 hour as well. But hourly, it's just target rich environment to the downside. Look, loads. So yen strength we need. Canadian dollar, however, powering up on oil potentially. So we need to be a bit careful of that one. Swiss yen pushing up. That's extended on the hourly. Obviously, we just looked at it, and the 4 hourly. It's just about to get extended on the hourly. And 4 hourly were extended. We've got beautiful resistance coming up here. How old is that gap? So we've got an old gap here, which has been tested once already, which we've come back up to again. So beautiful short area coming up on the Swiss yen. If we can get a little bit more of an extension, come and take out that liquidity, push into that propulsion gap, that's a beautiful place to short, because if we get in short there and that doesn't hold, we've got this level coming up here, we've got this level coming up here, we've got this level anywhere around there, you can't see. Yeah, so we've got this level here potentially. Yeah, we've got loads and loads of levels coming up. So if this pushes up and we get in short and it doesn't work out, you got a bounce point there, bounce point there, bounce point there. All this is kind of like 2-3 ADR apart, so not a massive amount of distance. So good looking opportunities on the Swiss yen for shorts. And that's it on those. So that is all of your RSIs for today. Morning, Stuart. Bye, Sammy. That was a brief visit, wasn't it? Morning, Adrian. Morning, Evan. Morning, Miora. How are we all doing? Evans, you're new here? Cool. If you're new here, go over to the website and watch the Position Trading Bootcamp. Now with funky new thumbnails. So yeah, go and watch the Position Trading Bootcamp. That teaches you exactly how I trade, what I do, etc., etc. Okay, right. So I'm just going to quickly have a look at the Dow, DAX. Right, DAX is not doing anything. Very wicky today. Very wicky. Market's not really sure what it's doing today, is it? So not good. Morning, Tokyo. So there we go. So DAX is not going anywhere. I'm hoping it's all going to come down. I want that DAX gap fill done, because that will drive the Dow down as well, and I really need that Dow to short. So having a quick look at oil. I've been in an oil. And I'm trying to get an entry on this long, but at the moment I'm trying to short it. So on the Fidelcrest funded accounts, I've had some oil trades on. So you can see got a short on there, which I stopped out on, got a short on there, which I just stopped out on. I think the other account actually had some oil as well, and that might have actually had more oil trades on it. Yeah. So with this account, as you can see, I had a short on there and I got out there. I've still got a pending order sitting underneath these lows. Yeah. So if this low breaks and this low breaks, and now the low from yesterday, which is basically, this is just bouncing off of this level constantly, which is basically 80. If we break that level, I'm going to get in short. And then I've got an add, which is actually not on this account, which I'm going to add here when we break that low. Yeah. With a view to getting this gap fill done. So gaps get filled virtually all the time. Every now and again, there's a fundamental shift, which will mean that a gap won't get filled. Now, this gap's been caused by the oil production cuts by OPEC. So as OPEC have cut, obviously, oil production down, it means that the stockpiles will start to get depleted faster, which means that there will be less supply and demand will not really change for oil. So therefore, the price of oil will go up. So what they're trying to do is drive the price of oil. 107 a barrel is what's been forecast, and then the forecast got dropped down to 95 a barrel. We're sitting at 80 at the moment. So there's still plenty of room upside. However, whether or not we are going to get that gap filled remains to be seen. Oil, when it wants to go crazy, it will easily do 150 ADR. As you can see, from where we are right now, 150 ADR is there, and this is round about 250 ADR. So this is literally a 2-day move, and we're done. Once that 2-day move is done, I will flip long and get in and try and ride the next leg up. However, it may not do it. Hence me being in and out a little bit on this and being a bit cautious with stops on it, because I wasn't sure whether or not we were going to get the fill done. We've sat now here for 1, 2, 3, 4, 5 days. We haven't even tried to go long or short. So this gap up has really sort of put a little bit of a shock into the market. Really doesn't know what to do now. So we're just waiting for someone to make a move. We are making lower highs. So when we had the gap up on oil, we put in a high. Then next day we put in a higher high and a higher low. So market structure looked like it was going to be sort of pushing up and down. Then we put in a lower high, equal lows, lower high, equal lows, equal highs, equal lows. Yeah. So we are basically contracting at the minute, but making lower highs. So it looks to me like the market is trying to drive a position short on it, which would make total sense. You can see where my targets were. Look, always targeting the gap fill. But at the moment, it's not really doing anything. So sitting there waiting on oil at the minute, hoping that we're going to get some movement on it. But what I would really like to do with oil is getting long. So the peak formation low is gone in here. We've got the high, low, higher, high. I was looking for an entry here, and then obviously we gapped. So what I'm now doing is looking for an entry here to get long next leg to come up and retest those highs, yeah, which is 82 a barrel. So looking at it long term and where we're going, yeah, 107 a barrel is here, 95 a barrel is here. Yeah, so these are the two targets that the institutions are calling. Goldman Sachs, people like that, they're calling 95 to 107 a barrel. We're down here. We've got a long way to go, and this is in the next 6 months or so. So there's plenty of time to get there, but I'm just waiting for a pullback so I can jump in long. So at the moment, I'm trying to short it down for the gap fill, and then when we get the gap fill done, if we get the gap fill done, I'll look for longs. If this thing just breaks out long, it goes without me. And then you're stuck with the quandary of, are we going to come down and fill the gap fill? Makes it really hard to trade when you've got something like this open. But anyway, that's oil. Obviously, oil is going to affect the CAD, because the CAD main export is oil. Morning, CACV. So we'll see. We'll see what happens with it, but tricky to call that at the moment. Adrian, did you video about building a small account fast? No, I haven't done a video on that. I did a bit in the live room on it. Compounding, basically. Days, I don't know, week or so ago. There's only a little session on it. But yeah, compounding, no, don't do it myself. So too dangerous. We are starting to push down on the DAX. What's Pan New Zealand doing? Holding in there, good. So I'm just concerned about my little funded accounts. Not this one so much, the other one. My other baby, EuroCAD. That's getting close to TP as well. Right. Okay, I'm going to whiz through all the pairs. We will have a look at everything. And just basically see if there's any decent opportunities out there. We know obviously there's not many RSI extensions, so anything that's extended on the RSI is obviously my bread and butter. So everything we get extended above or below RSI is my entries on lower timeframes. ADRs, if I spot any of these today, obviously I'll be jumping into those. But at the minute, there's not a huge amount out there. So I'm just going to whiz through all the pairs. I'm going to assume at the moment with everything, we are pretty neutral. So the buyer scorecard at the moment, if you look at the vast majority of pairs, they fall within a range. The ones that don't fall within a range are only not falling within a range because they've got retail sentiment pushing them up into a buy. And if they don't have that retail sentiment, then they're only +4s, which is just about a buy off the top of a range. So really, it's range bound. So there's very few pairs out there that I don't think at the moment you can trade in any direction. So you could take any RSI extension to the upside and the downside with a little fear of getting squeezed at the moment. However, that is going to change obviously with the fundamentals. And now we're seeing these interest rates flattening out. This is going to start to pay much more part in longer term price movement. So we're going to need to start paying attention to it a little bit more, I think, moving forward. So looking at your fundamentals, obviously, we're expecting the same rate again on the Canadian dollar this week. Everything else is starting to hit levels where we're thinking we can't go much higher because it's going to cause too much disruption on unemployment and GDP, etc. And everybody's inflation is starting to come down, which means we don't have to keep putting that up. So when that starts to come down, these start to flatten and start to come down, we then have to pay more attention to cot positioning and fundamentals in general. So at the minute, though, I'm just going to assume that everything basically is a buy or a sell, because at the moment the market is obviously just moving beautifully. And if you're position trading, doesn't matter as long as it's moving up and down. We've got market structure, we've got an exit, haven't we? So Aussie dollar CAD. So at the moment, Aussie dollar CAD is just testing this propulsion gap. We've got this big old propulsion gap target to the upside. This little blue area here is that previous support resistance zone that was identified. No, it's not. That's from another chart. Let me get rid of that. It would have been. It's not actually bad as a resistance area, but not related to this chart. So we've got big targets to the upside to aim for here on the hourly. So at the moment, I'll be looking for long opportunities. There was a long entry on it there. As you can see, I'm in long already. So looking for a push up into there at the minute on the Aussie dollar CAD. When is the news? Tomorrow. So obviously anything that you get into today, you need to be aware of what's coming up tomorrow. So US dollar, we've got the CPI figures that could well drive the US dollar up or down fairly hard. We've got the Canadian rates as well. So we're going to get some decent movement off the CAD as well tomorrow. So, and then obviously we've got FOMC tomorrow evening. So there's a hell of a lot of news out tomorrow. So anything US and CAD related, by end of day today, if I'm sitting somewhere around here at close today, that's coming off. I'm closing it out because there's no point in risking holding this into tomorrow, because the likelihood is tomorrow it's going to do that ahead of the Canadian rates, because it's not going to want to move before the Canadian rates come out. So just bear in mind anything you've got on with CAD and US tomorrow. We've got a big day coming. So that's a long at the moment. It's just pulling back. Carry on longing. Aussie dollar Swiss, again, big targets to the upside on this one. Two big targets to the upside. Cool, that's coming down this morning. Is that Swiss franc? Yeah, so big strong Swiss franc this morning. A lot of money coming into the Swissy. Big money coming into the Swissy this morning. So Aussie dollar Swiss, we've got big propulsion gap targets to the upside to aim for. Looks like to me it wants to come down and do a liquidity run on last week's low. So when we get down to last week's low, might be a good opportunity. So any ADR hit, any RSI extension, long opportunity. We have got upside targets to go for. 4 hourly, there's literally nothing there, is there? Nothing. Yeah, I mean, this low we've got from last week is the new low. So this is obviously in a big downtrend at the moment. So if you're going to long it, it's fine. But obviously bear in mind you've got no support coming up until we get back down to COVID, basically. So we are just dropping and dropping and dropping and dropping. So if you want to take that in line with trend, obviously you don't need to be looking for shorts. If you're going to long it, just make sure you get out fairly quick. Aussie dollar yen, just pushing up into propulsion at the moment. We looked at this one. Yeah, so that's an RSI extension to the upside. Push down into there, then back up into there, or push up into there, then back down into there. RSI extension to the upside would be my ideal today. If we got up to ADR today, be a lovely short. You've also got resistance, so that could be a second entry, and then come back down here and fill that. So Aussie Swiss, you go either way, really. It's obviously coming down at the moment. Sorry, Aussie yen. Is this yen strength today as well? Yeah, so we got a strong yen and a strong Swiss franc at the moment. Aussie New Zealand, that's starting to come down now. We just had a 5-minute reverse alert and retest on that. I just wonder if I want to take a short on that, on the Feedal Crest accounts. Do I? We got a very big target down here. We got a target up there as well. No, I'm going to leave it for the minute. So yeah, Aussie dollar, New Zealand dollar could go either way from where we are. That's the main problem. I would suspect, and it would make sense for them to come up here first because they want to drive the market short. It's a short, isn't it? So that would be the one I would say target and then get in up here. You could get in here and then take a second at 175 ADR and then go down to there. But at the moment, it's extended to the upside, so it's a short for me. Aussie dollar, US dollar. Got this propulsion gap, which we're targeting at the moment. Testing, rather. We got this target to the upside at ADR. So again, short. Strength on the US, weakness on the Aussie. So ideally, it's a short. Would like it to be up here. So if we get an ADR hit to the upside on this today or an RSI extension to the upside, that'll be a lovely looking short opportunity. CACV starting the verification phase today on one of the Feedal Crest accounts, carrying on with the ADR reversals, but I've dropped my risk down to 0.25% from 0.5%. Yeah, you're starting verification. Oh, right, good one. Yeah, so don't forget you get paid on verification with Feedal Crest. So treat it like a funded account now, because you're going to get paid 40%. So it's worthwhile playing it properly now. Chris, I see the Dixie is doing a small tumble. I don't, because I haven't got it. Right, CAD Swiss. Coming down hard. So all these Swissies are coming down hard. We got this big old propulsion gap target there. So we're just running into buyers potentially here. It's very, because today's the first day back after a bank holiday, it's very hard to tell what the market's going to do. It can do one of two things, basically. It can either drive in one direction hard because it's got lots of order executions to do, or it can start a move that it's been waiting to start. You never know which it's going to be. So the only thing you can really do is look at the clues that we've got in the market at the moment. So from where we are at the moment on the CAD Swiss, we're bang in the middle of a range. Yeah, so we've got a range high and a range low. We're bang in the middle of it. So right now, this is a 50-50 shot in either direction. There's no extension on RSI. Your entry was on Monday, yesterday. If you took it, well done, you're out. Other than that, this is where I would look to be headed. We've got these big old propulsion gaps up here as well. The CAD's been really struggling with oil prices dropping, and the Swiss franc has been doing very well off the back of the safe haven run. And then obviously what happened with Credit Suisse didn't help it. So at the minute, this is a really mixed pair. There's all sorts of things going on over the last couple of weeks that have been driving this up and down quite dramatically. So it's very hard to pick a directional bias on it. A lot of upside target. And you have to say, with what's going on with oil at the moment, with the gap up and the supply restrictions, it's got to be good for oil, got to be good for the Canadian dollar. So, however, the Swiss is a safe haven. If we get any fear coming into the market, this thing's going to overrun everything. And it certainly seems to be doing that this morning. So very difficult to call this one. So I wouldn't really be interested in getting into it unless it's extended on RSI, but that's all I ever do. Anyway, at the moment, I've got a buy on it from here, somewhere there. No, somewhere back here. Where the hell's that buy? Don't know, somewhere back there. It would have been there. There it is. So I got in long there. And obviously all we had was Thursday, we had a little bit of a downward movement. Friday, we didn't do anything. Yesterday, we pushed up a little bit. So haven't had a chance to get out at a target. Haven't had a chance to scale into an additional position because it hasn't moved far enough. So at the moment, I'm long, just waiting. If they come down and take out that liquidity, I will get into a second. There's your target. CAD yen, got sells on this at the moment. You can see my average is here, 97.87, which is just about an ADR. So we've got a propulsion gap target to the downside there. We've got these propulsion gap targets to the downside here to fill as well. So looking for a little bit of yen strength. Obviously, I've scaled out of this a little bit, as you can see. So initial entry was there. Looking for that continuation. Didn't get it. It broke out. Second position and taken a couple of drawdown controls. Took a little buy. This is the one I got hedged on. So made a little profit out of that buy, which paid for those drawdown controls. Just waiting for it to come back down, really, and target these areas down here. So need some yen strength, which we haven't got at the moment. Although it looks like it's starting today. Swiss yen extended to the upside. So that'd be a nice looking short. Drop down M5, reversal alert. Just had it, I think. Yeah, literally just had the reverse alert for a short. Beautiful propulsion gap target down at ADR. It's a nice, easy one. Euro odd. Downside targets at the moment. Got out of this morning. It's pushing up. No real bias on this, and it's not really been anywhere since we had that RSI extension last Thursday. So flat. See where it goes today. Every opportunity for this, I think, to drive. The euro, obviously, we're expecting the interest rates to continue to rise. They've said that they're not going to drop their interest rates. The Aussies aren't doing very well at all. If you look at the fundamentals for the Australian dollar, one of the few countries out there, their inflation is still going up. Yeah, they forgot to increase their interest rates. That didn't help inflation. Inflation goes up, they don't increase their interest rates, it devalues their currency. Yeah, everything's pushing against the Aussie at the minute. Euros, we're expecting on top of that 0.5, at least a 2.5 or a 5 on the next increase. Their inflation is coming down dramatically. So if their inflation continues to drop at a rate like that, and they put a 0.25, the euro is going to smash it. So I'd be very worried about shorting it. This is a good example, actually. Yeah, I shorted it there. This is what happens when you've got something that is fundamentally strong against something weak. It either goes into a stall or it goes into a push. Yeah, luckily I got out of that one there. And then look at the speed of that run up. Yeah, so the push is always going to be much stronger than the pullbacks when you've got fundamental bias. So more long than short, this one. So obviously any RSI extensions to the downside. Yeah. ADR hits to the downside would be good. EuroCAD sideways at the moment. Propulsion gap target at the moment is to the upside. We've got one that we're just testing now. There's very little to the downside. So again, I'd have to say long. However, this is a long against a long. Yeah. So, well, say it's a long against a long. Let's look at the fundamentals on it. EuroCAD. So COT bias at the moment is long on that. That's interesting. So the COT bias is long on it. Right, 82% of the market is short the Canadian dollar at the moment. And we obviously know they're long. So the minute, obviously, bear in mind that we are always a week plus 1 to 2 weeks behind with COT. This data that you're seeing here is data before the OPEC announcement of oil production cuts. So we might find that that actually starts to shift back to the upside now, that CAD bias. But at the moment, it's a long and a short, which is why it's a +4 in the bias scorecard. Yeah. So we want to be looking basically for long opportunities more than shorts. But look at the actual score. Although COT is a +4, retail is flat, fundamentals are negative. So the COT bias is outweighing the fundamentals, bringing us back to a +1. So we're range bound at the minute. If we go retail, all suddenly start to short it, we'll get a +2 there. It takes it up to a +3, which is still range bound. So it doesn't matter what you do with this thing's staying range bound. But you can see, yeah, there is ever such a slight bullish bias to it. But even on the pushes, every push has got a pull. Yeah, every push by the bank has got a profit take, push, profit take, push, profit take, push, profit take, push. Yeah, doesn't matter which way you're getting really. However, make sure you've ideally got a target to aim for, which we have in both directions on this at the moment. So getting long, getting short, doesn't matter. It's being pushed and pulled either way at the moment. There's no, I'm in long because we had an RSI extension to the downside, which is playing out nicely. However, if it was to get up there and get an RSI extension, I would be just as happy shorting it as well. Euro Swiss, it's completely sideways. Euro Swiss is a 56 ADR, very tight ADR. Euro and the Swiss are always a tight ADR in the same way as the Euro and the Pound are generally a tight ADR. Aussie, New Zealand is, etc., etc. So at the moment we're on what, 1, 2, 3, day 4 of a complete sideways movement. We're back down in this balance. We've got into 2-day balance. So we had a price discovery to the upside, went into balance for a few days, price discovery to the downside, gone back into balance. It's either going to go that way or that way. Targets to the downside. And we've got this old area up here as well on the Euro Swiss. So where we are right now, you're equidistant between two targets, one way or the other. If it goes down there, I shall go long. If it goes up there, I shall go short. But right now, bang in the middle of nowhere, could go either way. Take your pick. Euro Pound, similar sort of scenario on this one. We've got this low here, which is holding very nicely. We've got a descending triangle. So it looks like it wants to break to the downside. That would require a strong pound. If we look at the fundamentals on the pound, we are increasing interest rates again, which is good, bullish for the pound. However, our inflation is at the highest in the world and it's going up. Yeah, so it's not attractive. The pound is attractive from a currency perspective, which is why we've had a fair bit of bullishness on the pound, in the fact that it's a good place to put money at the moment because the interest rates are high. However, the fundamentals are pointing that the economy is not going to do well. So I'm waiting for this to change. As soon as that unemployment ticks up into a positive, we're going to start to see the pound decline, I think. So at the moment, the pound is holding its ground. Fundamentally, we're the only country that should be going into a recession. Everybody else, it looks like from the IMF's data, is going to not get a recession. If we get a recession, obviously, it's not going to be good for our currency. However, at the moment, as you can see, it's holding well. So literally, you can take this in any direction you like. It's got a 38 ADR. It's tiny. So it's the most horrible pair in the world to trade because it doesn't move. When it does move, yeah, straight in, straight out. Just looking at the trades I've taken on this. One. There you go. That's it. There haven't been any trades on it. So if you get extended, take it. If you don't bother. It's not going anywhere. Euro yen extended to the upside at the moment. So this is a long. However, we've got a big downside target. With the yen obviously being a safe haven currency, if there's any kind of problem with anything, this thing comes down. DAX is going short, is it? Yeah. So gap fill's being done on the DAX. So look for this area down there, basically, for the gap fill. Don't want that. Pound New Zealand. So yeah, so waiting for this to do something at the moment. The yen is difficult to call because obviously any issues we have with anything, immediately the yen powers up. So any bank that says we're wobbling or anything like that, the yen's going to power up. If the yen devalues too much and other currencies push too hard against it, it intervenes, the yen powers up. Yeah, so the yen at the moment is basically pushed around the market until it decides, actually, I don't like this anymore, and it gets pushed back. So it's really kind of, you can take it in any direction. However, I would always prefer to be short on everything against the yen, because when the yen powers up, it powers up hard and fast and goes for it. So I like it short at the moment because we've got that big propulsion gap target down there. Apart from that, there's not really anything you can look at on this one. If we get an upside hit up here, that'd be a good short as well. So I just like it short. And if it pushes out above that level, that'd be a nice short back down into there. Yeah, so whichever way you look at it, you can short this thing. As you can see, that's all I've really been doing. Yeah. Don't really have the end is very difficult at the moment. Very difficult instrument to trade. It could go in any direction at any time, really. So, but I'd much rather be short on yens. Euro New Zealand, sideways mess. Yeah, it's just broken out again of this high, so it is starting to push. We've had a nice strong New Zealand dollar. So fundamentals on this one as well. If you look at the fundamentals on these two. It's a buy at the moment because we've got cop positioning long. So it's not very short on the New Zealand dollar. Retail is all short on it. Therefore, we want to be going long. Fundamentals are pretty mixed. So of this +6, +5 of it is made of fundamental and retail bias. So neutral basically on the fundamentals on it. So again, another one you can take in any direction. Again, you see I got a short there. Out, had a short there, which got stopped out. Oh yeah, that was, why did that get stopped out? Don't know, that was weird. It's a stop loss. But yeah, like it short back down into this propulsion gap at the moment, and love it short back down into there. However, we're going to need some New Zealand dollar strength and some euro weakness. So we need to see what happens with the Euro next batch of news, basically, but they're talking about increasing interest rates. Therefore, we should be looking more bullish than bearish. But any signal you like on it at the moment, same with most of them at the minute. Euro US dollar sideways. So the Euro US dollar, when you look at this one from a fundamental perspective, is a sell. And it's mainly because obviously the strength in the US dollar. There's no cop bias because we are long on both of those currencies. Retail at the moment is shorting it. Therefore, it's giving an ever such a slight retail bias, but the fundamentals are short. Fundamentals are better for the US than they are the euro. So as you can see, two big currencies fighting each other. You're just getting a lot of movement sideways. So this has had a little bit of a squeeze on it. I would be happy to take it in either direction at the moment. Just waiting for some kind of extension. You see I had a little long on it on Friday. There. Yeah, so we had an RSI extension. That was also an ADR, I think. ADR 78. That was 86. So that was an ADR and an RSI extension out of that one this morning. There's another one there, look. In, out, done. So nice and easy to trade in both directions. It's a short from the buyer scorecard. However, it's not that short. As with everything, everything is just not that short or not that long. There's a couple that are getting there now, but everything else is still within the range bound. Yeah, so we're all either way on it. Let me just have a quick catch up on the chat before I go into the pounds. Morning, AGB. Do you ever look at crypto? No, don't trade crypto. Morning, MPA. Have a look at Finding Pips prop firm. Hang on, let me get my let me get ready. Let's get John. We don't need gold at the moment because we're not going to do gold. Everyone's going to leave now because I'm not going to do gold. All right. I forecast, having never heard of this prop firm ever, that they use 8cap as a broker. Finding pips. Funding pips. Yeah, that's them. Ready? No, I'm wrong. That's a first. Not a first me being wrong. A first for a new prop firm coming onto the market that doesn't use 8-cap. Black Bull, 75 only. Never heard of them. So let's check them out. $399 on a 100K account. That's cheap. Student practitioner. Sounds like a dentist. 30 days, minimum 3. That's not bad. 12% loss, 8%, 5%. Leverage is good. Um, 80% payouts. Trade the way you want, use an EA, trade news, hold over the weekends. Looks good. Amazon. Went live November 2022. So they've only been going for 4 months. Don't know. Look, they look pretty good. Rules are pretty good. I'm putting together on the website, hopefully today or tomorrow, I'm going to have a complete comparison chart with the top sort of 10 to 15 prop firms out there, showing you exactly all the rules and everything, which I'm putting together at the minute. So I'll have a look at these guys. I'm just going to bookmark them on my bookmark bar. There we go. Just to remind me. So that we can evaluate them all basically and see what all the rules are. But they look pretty good. But the only thing I would say is they've only been going for 4 months. Yeah. There's around about, well, don't quote me on this, but I would say somewhere in the region of 10 to 20 prop firms a month now starting up. Yeah. I have a huge bookmarks folder of prop firms. Every now and again, every month or so, I go through and look at them all again. About 5 or 6 of them aren't there anymore. The websites have just vanished. Basically, what they've just done is made a couple of million quid and run away with everybody's money, right? So if you're going to use prop, and I keep saying this over and over and over again, use one of the big 3 because they're not going anywhere, right? They're not ripping people off. They've got payout proof. I trade with them. Yeah, so I trade with them myself. I've been paid by them all myself, and therefore I trust them all. These guys, I could sign up for them, pass, but I don't know if they're going to be here in 2 months' time because the funding model for a prop firm is on evaluations. If you spend £10,000 a month marketing your site and you don't get enough revenue coming in to cover that marketing and pay the traders who actually pass evaluations, your business fails overnight. So that's the prop fund business model, evaluations. So if I need to get £20 million worth of evaluation revenue in a month and I spend 5 million doing that, and suddenly I have to pay out 15 million in trader revenue, my business is bankrupt. Obviously, whatever I've got in the pot, but that's the business model, yeah? So this is why these firms are cropping up, which is why I said about the 8-cap thing, because 8-cap as a broker now, you can go and sign up and become a prop firm. So this afternoon, I could literally have a prop firm website up and running with my logo in it, and I could get you all to sign up as a prop with me. I'm just a guy sitting at home trading, right? But I could be a prop firm. And this is why so many of these things are starting up, especially with 8-cap, because 8-cap have white labeled it. So just be careful, you know, yes, they look good, but then I have to say, Are they any better than my Forex funds, FTMO, Fidelcrest, or E8? If there's no reason to use these over those, why would you use these guys? Why not use someone established that turns over somewhere in the region of 500 million a year? Why would you not use them, and why would you use funding pips? There's got to be a reason for me to go, oh, they're half the price of my Forex funds. I'm on board. Or their targets are half of my Forex funds. I'm on board. There's no reason that says this is amazing and way better than everybody else out there. There's no reason to jump ship, is there? But I will have a look at them. I'll put them on my list. Maybe we'll do an evaluation with them. What's the cheapest account they've got? 150. Algo, what's that? What's the difference between algo and standard? Am I blind? What's changed? Only profit splits, no refund. What? Don't know. Anyway, I'll look into them. I don't know why that's that. I don't understand why pressing a button on there jumps by $100 and you can only have a 100K account. Anyway, there you go. Always good to look at them. I like them. Ratib, have a look at gold. I did it as soon as we started. Yeah. Oh, there's some gold. Sorry, I'm in sarcastic mode. I don't trade gold. EJ is 300 pips from 148, a 2-decade high. So it is. Doesn't really have anything to do with today, though. Doesn't mean it's going to go up or down today, does it, really? Afternoon, Brian. Afternoon, Texas. Texas NZ. Hi from New Zealand. I love New Zealand. I spent loads of time in New Zealand. Best prop firms are the Fivers, T4 Capital, and Ultra Capital. In your opinion, Nuno, in my opinion, they are the worst. Doesn't matter. Use whatever you want. Doesn't matter. You're not going to pass. No one's going to pass. No one ever passes prop. 2.5%. Have I banked something this morning? Oh no, I've made a loss. There you go. Pound New Zealand. But yeah, seriously, use any prop firm you like. Just, pick one that is viable, basically, is all you need to do. So I just need to set some targets on these. What do I need? 2.5%. I'll let that run. But yeah, prop. Obviously, I'm putting together this table, which is going on the website. I might not get it done today. I've got to complete it. But what I've done is I've got every single prop firm, and I've looked at every rule they've got, all the conditions, the trading conditions, everything, and I've basically built a table which you can filter, and it will basically say, right, I want a prop firm that's got an 8% target, has no minimum days, and that uses MT4. And you can do that, and it will go, ping, here's you guys, and then you just pick the cheapest, because there's the only reason ever to use a prop firm is it cheap? Has it got a good execution? And are the targets reasonable? Other than that, they all do exactly the same thing. So pick the guy that isn't going to go bankrupt is basically the rule with prop, isn't it? So the Fivers are great, except their rules are terrible. T4 Capital, never heard of them. Ultra Capital, never heard of them. Therefore, they're tiny fly by night. Let's look at them quickly. T4 Capital and Ultra Capital. If Basically, if they're 8 cap, permanently closed. If they're powered by 8 cap, they're basically, God, this is an awful website. Look at them. That's not a prop firm, is it? Got to be that one. Yeah. So yeah, if they're powered by 8 cap, ta-da! It's just basically, it's a white label affiliate. Yeah, it's a white label affiliate. Chuck it off, don't use it. That's the worst broker in the universe. You won't pass with them because you can't get your order execution done. They got terrible spreads, terrible commissions, terrible everything. So, like I said, if you want to use this firm, right, I'll set you one up tomorrow. Whatever their price is, I'll undercut it by $20 and just use me. Because all you're doing is you're trading with 8 cap on a demo account. So you might as well pay me to trade on them with 8 cap on a demo account rather than pay these guys. Ultra Capital. I think the same, is it? Trading, there we go. Ta-da! 8 cap. Just don't bother. Seriously. When I get my new page up, I'm going to explain to you. I say it in here every day, but 8 cap, just any broker, any prop firm that doesn't use 8 cap, fine. If they use 8 cap, they're all the same. Like I said, look, I'll show you. E8. No, that's not them. That's E8. Where's 8 cap? 8 cap partners. Where's their prop bit gone? White label. There we go. But basically what they do is they give you a website. So if you go with any 8 cap prop firm, the admin area is exactly the same on every single one of them. Yeah, because you are trading, they're all the same. So all the differences with every single one of those prop firms like Ultra Cap and T4 Capital and everything you just said, right? The only difference between them is they've got a different logo. Yeah. So the pricing and the rules are set up. So I'm going to set up a prop firm tomorrow and I'm going to say you've got a target of 0.2% on stage 1 and you can pass it in 1 day. And the second stage, your target is 27% and you've got to pass it over a 50-day period. Yeah. And I'm going to charge you $4.99. Literally, I can do that today because all I do is I press a button on here. I get an account with these guys and they set me up a website and then I put my logo in it and I say stage 1 this, stage 2 this. I would like to charge this for the evaluations. I just get 22 million a month coming in revenue for evaluations, and I might pay some people if they pass. But as we just talked about this morning, if I don't fancy you getting through, I'll just spread and blow your account because I'll spread it up so you basically hit the 5% daily loss limit. No one ever said I didn't tell it like it is. Anyway, there you go. Lux, yeah, Lux a good firm. But you know, again, I'm going to put this spreadsheet up for you to all have a look at, right? But Lux are not, they're not as cheap. Their conditions are not as good as my Forex funds, E8, and Fidelcrest. Yeah, those three. Yeah, my Forex funds, E8, and Fidelcrest. I don't think anybody on the planet could ever challenge me on the fact that those 3 are the best out there because they are the cheapest. They have the best trading conditions and the best liquidity because they don't use 8 cap. What else do you need? They're established. They're multi-million turnover businesses that have been established for years. Fidelcrest has been going for 7 years. They're still here. Why? Because they know what they're doing. These guys that we just looked at unlike me, I'm a guy in a house, going to set up a prop firm this afternoon and put some marketing on Facebook. If I make my evaluation cheaper than everyone else's, you're all going to use me. Is your trading experience going to be any different? No. Am I going to make a lot of money? Yep. That's it. That's how it works. Anyway, we'll stop talking about that now. I like talking about it because I like talking about prop. Currently, I'm selling US dollar and making a ton. Cool. Good man. Right, pound odd. So pound odd is extended to the upside at the moment. Has been sitting up there. Well, was extended to the upside, obviously, there when we got up there and there. And has been sitting up there ever since. You see my shorts on it there. Yeah. So again, same thing. You can take it in any direction. That is where I think we're headed. We're going to need some strength in the Aussie, though, which is going to be tricky to achieve, I think. So pound is grinding up and has been grinding up constantly. As I said, the pound is uncharacteristically strong at the moment. The inflation rate in the UK is through the roof. So I'm not quite sure why we are so attractive at the moment, but it is. So the pound is pushing up hard. Again, doesn't matter which way you go into this, really. You will get an exit on it because everything's got a strong enough range reading at the moment that it will be a push and a pull, go either way. Obviously, all you're going to do with it is wait for news. So when you get some decent news, you'll get a pullback and a push up and in and out. But wait for an extended condition. So we know the banks have moved strongly in one direction. When we know that condition is met, then they will do their profit take, and that's when we're going to exit their positions. Pound CAD, same thing. These Pound CAD and Pound New Zealand, the ones I got into long-term positions on, obviously out of them all now, but waiting for that to get extended. Had a short on it from Tuesday last week, got out yesterday. Not extended at the moment. Big downside target here. So this downside target we got down here has been tested 3 times and held. So there is obviously an awful lot of buying pressure at the moment, which has meant that this has pushed up hard. At the moment, we still got all these downside targets to aim for. We got this big one here. So it's more of a short than a long. And again, we need that Canadian dollar strength. So all this news we've got coming up this week is US dollar based. US dollar and CAD, obviously, with the unemployment rate. Sorry, the interest rates. All US dollar movement affects the CAD as well. So if we get a big strong push in the US dollar, we get a strong push in the Canadian dollar along with it. So we've got multiple Canadian news coming up this week, if you look at it in that respect, and the fact that we've got the CPI in the morning, then we've got the interest rates in the afternoon, the press conference, and then we've got FOMC in the evening. So there's 3 news events that are going to affect the Canadian dollar tomorrow. So if we get some strength at all, this thing could come down easily a 200 ADR move tomorrow, couldn't it? So it looks like a good looking short opportunity at the moment. I got out of that short yesterday from there. If we do get a push up today and they come up and try and take some liquidity up at the highs, they're going to need to move it 125 ADR, look. Yeah. So to take out last week's high, they've got to push pretty damn hard today, which means that either the pound has got to strengthen up massively or we've got to see some big weakness in the Canadian dollar. If that was to happen, I would be jumping in short on that. So I like that as a short more than a long. Right now because of what's happening with oil specifically and the fact we've got the interest rates coming out tomorrow. So interest rates remaining as they are is positive. Yeah. Interest rates rising is positive. So if we get the as expected tomorrow with the Canadian dollar interest rates, we should see a pump in the CAD. So either way, I like that as a short. Pound Swiss coming down at the moment on Swiss franc strength, going up and going down, isn't it? Not really doing anything. So got a big propulsion gap target there, which is tested once. That's still open. We've got a big propulsion gap target to the upside. That's still open. Could go up, could go down. Just wait for some kind of extension, really. If you want to jump into it now, you can. If you go long and it comes down to here, go long again. If you go short and it goes up to there, go short again. Just scale in, scale out as usual. No directional bias. Pound yen, I've got shorts on at the moment, 2 positions short on this. All the targets are to the downside. We've got this big propulsion gap we're coming up to retest again. So I think this could come up to ADR and put in another high. We've got Bailey talking tomorrow twice, but I mean, the first one obviously difficult to tell with that. But the first one's kind of an online event. The second one is a proper event. Well, I call us as a proper event. So potentially we get some movement off of the pounds tomorrow. However, GDP on Thursday is probably the key thing that we want to be paying attention to. So until then, it can kind of go wherever the hell it likes, can't it? So at the minute, I've got shorts on because I got short on this extension here. And then we had a one-day push, accumulated for 3 days, pushed, took those highs, came back down again. So, you know, it's just not going anywhere at the moment. It hasn't gone far enough to get me out of the positions. So, but yeah, like that as a short. Pound New Zealand, again, this is the other one I got stuck in. Did an aggressive drawdown control position on that one to exit everything. Pushing up, still got this propulsion target to the downside. Again, uncharacteristically strong. New Zealand, we had interest rates going up by 0.25% more than expectations, didn't we, previously, last week, or was it the week before? Still didn't get that strength in the New Zealand dollar. So the New Zealand dollar is really starting to weaken. It's had a really good run, but now it's, as you can see, it's weakening, especially against something like the pound that shouldn't really be that strong. So, however, very, very, very good market structure on it. It's up, down, up, down, up, down, up, down. So you're always going to get a way out. That was a 2-week hold, 2.5 week hold or something. Let's get into extended conditions now. Ready for a short. It looks like we've got a resistance coming up. Yeah, got a couple of resistance areas coming up. Can't quite see that. Okay. So got that nice zone here, which is about 250 ADR. We got this high here and that high there, which potentially could act as resistance, which is again 100 to 125 ADR. So that would be nice for shorts. By the time you get there, you'll be extended on the hourly to the upside. Yeah. So nice little short target there. And obviously we've still got this bit hanging over us down there. That could be weeks away. However, you know, GDP, if we get negative GDP on Thursday, I think that could really affect the pound. We're forecast not to go into recession. So our GDP at the moment on the pound is sitting at 0.1 quarter on quarter. Our forecast is just about to survive recession now. We were forecast to go into recession, and the IMF still are forecasting recession. However, there's a lot of institutions now that are saying maybe 0.2, we might miss a recession this year. So if we get a negative on GDP, I get the feeling the market might frown on that, because we know why that GDP is coming down, because we are not getting on control of inflation, because we're not doing this high enough, fast enough, which means that's got to go up. But that will drive up unemployment. So everything that the pound can do at the moment, every move that the pound has to make is potentially negative for the pound. However, at the moment, it's just holding very nicely because everything else is obviously pushing up interest rates as well. So I can't see any other route than down. And as you can see, the strength in it is so unbelievably weak. Yeah, it's just, you know, this isn't trending, is it, in any way, shape or form? It's just a bit stronger than the CAD because oil's been collapsing. Oil isn't collapsing anymore. That's the most likely move. So we might well push up higher before we do that. But at the moment, as I say, either way, you can take it long, take it short, entirely up to you. Just wait for it to get extended so there's a profit take move on the cards and you'll be fine. Pound US dollar, like they're short, much more short than long. We've had a weak US dollar. Everything that the US dollar does news-wise positive, it has a little impact. Every time we get a negative news, it has a massive impact. So the market is just waiting for any opportunity to short the US dollar at the moment because we're hitting terminal rate on the interest rates. Yeah. So the market's not really that interested in taking long-term positions, US dollar strength, because it knows the interest rates are going to come down. So if you look at the COP positioning, we're 69% short, long on the US dollar. This has been sitting around that level for quite a while now. I'm just trying to think of something to look at. So yeah, we've been sitting long on the US dollar for quite a while now from a COP positioning perspective. And as you can see, if you look at all the US dollar crosses, they've been ever so slightly weaker than everything else. But that's partly because they got to terminal rate, or they're getting to terminal rate quicker than everybody else. So there is only one way down. As soon as you get to that peak, where you start to roll over and you start to come down. So with all these pounds, I would say if you look at all the US dollar pairs, yeah, at the moment they're all kind of sells, but they're not strong sells. And the US dollar pairs are buys. US dollar CAD is probably a better buy than the rest, obviously you can see, but nothing is particularly convincing. And I think that is probably going to switch back to much more of a neutral, more of a range reading as we move over the next couple of months, where other interest rates start to flatten out. I think then we'll start to see this weakness come in the US dollar. As long as nothing else happens, like a war or banks start to fall over again and stuff like that. But right now, you can take it in any direction. Obviously, you can see the market structure is very nice on it. So as long as we're getting that push and pull, the market structure is retaining as it is, you're going to have exits. So either way, right now, from a directional perspective, there's more targets to the downside than there is to the upside because of this big push that we had. So it's coming down very nicely. It's a bit too long to be a flag. We're just taking out liquidity at the highs at the moment. So shorts, if we get extended above there, I shall be getting in short. New Zealand's, again, difficult reading on the New Zealand dollar. Very, very range bound against most things at the moment, either direction. We've got this propulsion gap. So if we can get that filled and get another extension on RSI, that'd be a nice looking long, because you've got this big target here, kind of done, and you've got a big target there. So any kind of push down, push back up into there or up into there. New Zealand dollar Swiss, again, nice support coming up at the moment. Swiss franc is pushing hard. We've got two other areas of support on this, 175 and 225 ADR. So if we get this bounce back up, brilliant. If it doesn't happen, you're looking at roughly 1.5 ADR or so drop to the downside to take a second position. So it's coming down hard at the moment. Strong Swiss franc. We are in a downtrend on this, mainly because of Swiss franc strength. So again, push back up into there. And then once we go up into there, potentially you'll see the 24.72 coming down for a second leg. So we're either going to get that double bottom bounce. Either way, I think we will get a double bottom bounce. Whether the bounce holds, don't know. We'll wait and see. But right now, it's just starting to get extended to the downside. We're so close to that bounce, aren't we? I've got the Aussie dollar Swiss on long at the moment, so I don't really want to take New Zealand Swiss as well. But yeah, I like that. What's this Dow up to? New Zealand dollar Swiss, New Zealand dollar yen, again, same thing. All the other yens virtually sideways. Got a sell on at the moment off of that RSI extension, which triggered yesterday. There you go. There's a really good example of what we were talking about earlier. Yeah, look at my entry on this. There's my entry. There's the close. Yeah, 15 minutes in, we had put in a spread of 25. Yeah, which is quarter of an ADR in that 15 minutes. Nuts, isn't it? So yeah, that's my short entry. Just waiting for it to come back down into propulsion, basically. Here's your targets down there. New Zealand dollar, US dollar, sideways, take your pick. That propulsion gap down there, I would say, is finished. We've already done that. So upside targets at the moment on this one. That's virtually closed. So where we are testing at the moment, at some point back up into there, we could just shoot straight back up into there. But right now we're bang in the middle of nowhere. So almost got an entry on that on Friday, which would have been a nice little trade, but didn't get it. So yeah, either way on that one, nothing really to look at. I've got buys on at the moment on the US dollar CAD. So again, looking at the buyer scorecard, this is one of those which we've got negative bias here at the moment because retail are currently longing it. So when retail stop longing it and they start to go short, this could potentially come up to a +10 because we can add 3 onto this retail sentiment. So there's much more argument for being long than short on the US dollar CAD at the moment. As Canadian strength pushes the US dollar and US dollar strength pushes the Canadian dollar, what you tend to get is more of a rise in the US dollar CAD because the US dollar economy is bigger than the Canadian. So when you look at it long term, what you tend to find is that the pushes are stronger than the pullbacks, vast majority of the time. So the US dollar is always mainly when everything's going okay or mediocre, the US dollar is always the one that tends to take the upper leg. So we tend to get a slightly bullish incline when we've got any kind of sideways movement with the two pairs. And then obviously every now and again we get a massive bull move or a bear move, which drives it, into a bigger leg. So I like it long at the moment, US dollar CAD. I'm in long already. Just waiting, basically. There's your propulsion gap targets to the upside. You've got one there which has already been tested, almost came and retested that. So loads and loads and loads of news coming up all week, US dollar and CAD related. So this thing's going to go wild all over the place. I've got 3 positions on it. If it pushes down, obviously I'll do more drawdown control, deal with it. But I've got no problem being long on it. Just waiting for it to get a little bit of good news. Like with everything, all we're doing is waiting for some news to come through where the market goes, oh, like that. It's all you're waiting for. And other than that, we're just going to sit and fester, unfortunately. US dollar Swiss. The moment this one has got, that's virtually filled that propulsion gap. We've tested it twice, 3 times, in fact. And again, there a little bit. We've got this tiny little orphan propulsion gap there. There's no targets to the downside. So there's more upside than downside on this one as well. But again, Swiss franc, if we get any kind of fear entering the market, that will power up. We've just come out of extreme fear and fear into neutral. Now we're going into greed. So there's more chance of the US dollar pushing against the Swiss franc. However, obviously today we just need to see what they're going to do today. They may well come down and take that liquidity. And US dollar yen. Got short on that. That could go either way. Could go up into there or could come down and fill this propulsion gap. We've got this one down here as well. So right now that could go either way. We'll see what happens. But I'm short at the minute because of the RSI extension, which is now pulling back quite nicely. So it'd be nice if I can get out of that here and be done. And then obviously it can do what the hell it likes from there. I don't care. There you go. Not got the gap fill yet on the DAX. That's everything. Lux Trading uses another after prime. Oh yeah, we talked about that, didn't we? Keith, morning. I've been watching for a month and plan on purchasing the MRA ORB EAs. I'm on the Bootcamp Part 4. I'm personally aiming for prop firm trading results. Cool. I shall have a chart out soon where you can do an evaluation of all the prop firms and decide which one to pick. When I get 5 minutes, which isn't often. Dances, this might sound silly, but what's EA again? Expert advisor. Trading robot, basically. So it just automates your strategies for you. Jarmond, took my 0.5% from the DAX when it bounced at yesterday's high. Yeah. Double bottom. Not convincing today, is it? So that was Thursday. This is the first trading day of the DAX, isn't it? Since last Thursday, isn't it? Yeah. I'm quite surprised this isn't more volatile today because they must have a load of orders queued up ready to go, but don't seem to be doing an awful lot at all, do we? We will see. How's the hedging EA? Good. I covered that first thing. Oh, the hedging. Yeah, sorry, the hedging. Yeah. Yeah, fine. 4.8%, done 6.98. So it's really disconcerting. I keep catching my my bling out the corner of my eye. And it's really disconcerting because I don't wear bling. I'm taking it off. Look how shiny and sparkly it is. Look at my gold, everybody. Look at all my gold. EA, a smarter Ed 209. Yeah, ever so slightly smarter. Do you know if there's a way to automatically control restrict exposure? No. That's your job, Kenny. You are the trader. EAs execute strategies. Your job is to trade. If you, in my opinion, if you try and automate 100%, if you try and automate everything, and you take yourself out of the equation 100%, you will completely lose track of markets. You will come out of thoughts with analysis. You will forget things. You've got to do this as a job. If you want to do this as a job, it's a job. Obviously, if you want to do this as a second income or something, then yeah, you're not going to be doing it every day. But if you try and 100% automate everything, and this is part of the reason I haven't built any kind of aggressive drawdown control functionality into the market reverse alerts EA or anything like news trading filters and all that other stuff that everybody keeps saying that would be really good if it did this. It's because if you don't ever look at it, you will just come back one day and you won't have an account left. It'll be blown. And it's things like this weekend really hammer it home. I haven't looked at the markets in detail since Thursday last week. We're now on Tuesday, yeah? First thing I did this morning was I went through Financial Juice. 3 days. Yeah. I opened up every single chart on the 4 hour and I flicked through everything and went, right, what's happened in the last 2 days? Because if you try and limit exposure with some kind of automation, what will happen is you'll miss a load of opportunities. Because you won't realize that ADRs have suddenly contracted and you need to adjust something to make sure that you get into opportunities. You'll suddenly go, well, why is it not taking any trades? Look at the 4 hour set file, yeah? Look at the 4 hour mean reversion set file. It's done 1.5% this month. Why? Because there's not been any 4 hour RSI extensions. If you left this completely unattended and you were only trading H4M15 or H4M5 mean reversion, you would suddenly come back in a month and go, I can't pay the mortgage. Because you haven't been watching it. You've got to watch everything. There are EAs out there that can do everything for you. There's lots of EAs that will manage your positions, and they will close out when you get to a certain level, or they will do this when that happens, or this when that happens. There's all sorts of EAs you can bolt on to your account to monitor things and do certain things. So there's probably one out there that you could use to monitor exposure and to control it. But my argument is, if you monitored everything and said, right, I've got 2 US dollar longs on, and the best possible short opportunity came up on the US dollar and you didn't take it because your EA monitored it and said, no, you can't take any more US. However, there's an amazing US dollar short. You missed that trade, which makes you 0.5%. It should be your choice as to whether you take that trade or not. You can always close a position. So you can monitor your exposure. Yeah. And you can look at your exposure and go, I've got way too much Swissy on. We've got the Swiss franc rate announcement coming tomorrow. I'll tell you what I'm going to do. I'm going to close Euro Swiss and take a 0.21 loss. And I'm going to close CAD Swiss and take a 0.22. So I'm going to take a 0.5% loss because I've got too much on. I can make that decision. The EA doesn't know which one to close, why, or what it's got to do, because I'm the person in charge. There you go. Look, I've just made something else just shot out there. 1.6% gain. Right now, I'm sitting in 1.6% gain today. I can easily get rid of that Swiss, and that Swiss, and still be sitting on 0.8% profit today. EAs can't do this. They can't make this sort of decision process. You're a human. You've got to do stuff, which is why the market reversal alerts EA is, I've always pushed it and sold it as a semi-automation tool. It will automatically trade the strategy for you on 100% autopilot. However, it doesn't know when Ukraine is being invaded by Russia. It doesn't know when there's an earthquake in New Zealand. It doesn't know when the Prime Minister of the UK comes out and says, tell you what we're going to do, something really, really bad that's going to crash our currency. Yeah, it doesn't know any of this stuff. All it can see is prices. Yeah, so and it doesn't know how much money you've made this month. It can look and see how much money you've made this month, but what decision do I need to make on that 10.43% profit I've got there with that 2.39% drawdown? Nothing. Now, if I set a rule up for the EA to say when you get into 2.5% of drawdown, close out 10% of all positions to keep my exposure low, I might be looking at it and saying, no, don't do it now because I've got way more. How much money do I need? Have I got to pay for a holiday this month or not? There's so many factors. So you can find EAs that will, and this is something as well people don't understand don't realize is that you can run multiple EAs on your account and they will all do different things. So you can have these EAs which will, if you get to 2.5% of drawdown, you can say to it, shut everything down. For a prop, for example, you can say to it, close it all. And all the other EAs will do is go, oh, my trades have been closed. Right, back to monitoring the market. So you can mix and match. Just find one that does what you want it to do. But think about the reason you want that automated. Is it something you should be automating and do you want to automate it? Or is it something that's lazy? Holiday. When I go on holiday, I turn off the EA as much as possible because I don't want to have to sit on holiday thinking, oh my God, have I got to do drawdown control today? Take a week off. It's good for things, good for some things, but not good for others. Stevie, I used the hedging set file from Telegram group and never touched any settings. What would you say was time you'd look at aggressive drawdown control? That's a personal thing. Again, Bootcamp. Day 4. Drawdown control. I was saying that Bootcamp, there is no answer to that question, Stevie. Your highest drawdown on any pair is currently 1.3. Yeah, and it's trading. If it's trading all 28 pairs and it's in 1.3% of drawdown, are you uncomfortable? If you are, do drawdown control. If you're not, don't. Drawdown control is a trigger mentally by you as a trader for I am uncomfortable with this position, this situation. And that will be different depending on what you've banked this month, what your overall account exposure is, and what the individual position drawdown is. Yeah. So if I've banked 10.43% like we have at the moment on this account, and I've got 2.4% of drawdown, not worried. However, if the Swiss franc suddenly pushes really, really hard and one of the Swiss franc pairs goes into 1.2% of drawdown, I'll be looking at this thinking, hang on a minute, I'm in 5.x% of drawdown and I've got too much exposure on the Swiss. I need to do some drawdown control. But I will say that. Someone else in here will say, when it gets to 2.5% and this is at 15%, I will start to do drawdown control. Everybody's got a completely different risk tolerance. If this is your only account, your only income, your only job, you're going to have a completely different view on it. So if this is a $2,000 account you've set up to hopefully buy you a couple of nice meals out with your wife, your decision-making process is going to be totally different. Which is why I say in the bootcamp, you can't say when X does Y, do Z, because X and Y is different for everybody. So therefore the outcome of Z is totally different for everybody as well. But all I would say is if your US dollar yen just exited, I just realized that was the trade. It's just shut. There you go. So yeah, that's not really answerable. All I would say is if you're running on all 28 pairs, be careful of exposure. just because obviously the your exposure is going to be very, very high on individual pairs if they're going to a squeeze. Yeah. If you're going to run it on all 28 pairs, at the moment, that's okay. But as long as you're aware of this, your exposure, that's the key. Yeah. And when the US dollar, right, tomorrow, we've got all this new US dollar news. When the US dollar tomorrow does a 200% ADR move to the upside, right, and you've got 4 shorts on, you're going to go into something in the region of 10 to 15% of drawdown. As long as you're aware of that, fine. And if you're not happy with that, get rid of some of it. Or scale your position sizing down. Instead of 0.25% risk on half an ADR, maybe go 0.25% risk on 1 ADR. Reduce your risk. Yeah, I don't. There's a, and this is something I'm going to do in the new. I'm planning a new version of the Bootcamp, which is going to be kind of an updated version at the minute. And in there, I've always said that you should limit your exposure to two directions on a pair. Yeah, so CAD, if you've got 2 shorts on, you can't go short anymore CAD. You could go long CAD, because it doesn't matter. If that goes up, fine. You can then deal with these 2 later, because these are going to make you a profit. But in the bootcamp at the moment, it's kind of, once you've got 2 exposures on, that's it, because we've always used a directional bias. When there isn't much of a directional bias, you could obviously hedge yourself longs and shorts. You're unlikely to do that, because to do that, you've got to have the RSI getting extended in both directions, haven't you? Yeah, so short there, long there, absolutely fine. Both trades work, not a problem. But in the bootcamp, it's very much a case of once you've got 2 US dollar shorts on, that's it, no more. So you've just got to be very careful with your exposure. And if you're going to run it on all 28 pairs, no problem. You can go 4 short on the US dollar, just half your risk. So if normally, as I would say, 0.25% on half an ADR is what we would normally say to do, if you're going to run it on 28 pairs, go with 0.15 on half an ADR. Yeah. Or better still, 0.1. That way you can get into more pairs. That's fine, because some of these opportunities are going to play out. Some of them aren't. But you need to make sure that that is not going to get to stupid figures. And obviously doing drawdown control regularly is going to massively help with that. The reason at the moment the drawdown is quite nice and low is because we've got quite a sideways market, but also I'm scaling out all the time now. Rather than just waiting for 3 or 4 positions to then start doing drawdown control, I'm doing drawdown control on day 1. Yeah, if it moves an ADR against me, I'm getting out of some of it. Yeah, making just being more cautious. But again, there's no right or wrong. You know, the EA is the EA. It does what you tell it to do. I can give you examples of strategies that work, but as I've said in every, all the time in the bootcamp, and I say all the time in here, you're going to get into a squeeze. At some point, one of these instruments is going to get a parabolic news event that's going to send this thing off, and it's going to go off for weeks in one direction, and you're going to be stuck the wrong way. And if you are stuck the wrong way, you're going to have to deal with it. If it's the instrument you've got 6 shorts on with full risk, it's going to hurt like hell, but you'll learn from it. But you can always get out. Yeah, which is why I've, all the new set files that I've put out, all of them have drawdown control turned on now as default. The other ones I set initially, they didn't have drawdown control set as a default. I think some of them did. I think the M5 hedging set file did. But I'm much more automated now. So I'd rather take a loss. And I think it's prop that's making me trade more this way now, because on the prop accounts, I've got to be on top of it. And I'm realizing really, actually, it's better just to take these losses to a certain extent. They're only small, but just, you know, that's actually a big one on that pound New Zealand. But look at the pressure release valve that's just triggered. Yeah, that was $1,000 in drawdown. Now it's not. And if you look at my exit on it on the pound New Zealand, yeah, my average is there. Look, I'm way within an ADR still. Easy to get out of that, and I can take another one short now. I won't take it here, but so that's 73. That's half an ADR. So if it hits ADR today, I'll probably take another short up there, which will bring my average up into there. So then if we come back down into here, that's going to way more than pay for that little loss there. But do it gradually. Get in and get out and scale in and scale out gradually. Hopefully that answers. Probably not. Doesn't help you much, does it? Because there isn't an answer. It's one of those, it's one of the woolly ones. There is, you know, strategies I can say, yeah, for sure. I can tell you 100%, do not get in unless we're extended above there. And wait for the reverse alert, because we're waiting for structure shifts to the downside to make sure that we're strong when we get into our trades. But as for getting out of your trades, there isn't an exact answer. Everybody's going to have a completely different opinion, or slightly different opinion. But if you want to be led by me, somewhere around about 2% is where I start to think this is getting a bit more wrong than I thought it was going to be. Chris, which set file is that? The one you had opened on US dollar yen 4 hour. This is the H1M5. This account is H1M5, which is my favorite at the minute, because it just banks money all the time. Anything that banks money all the time is my favorite. It's just lovely. Just in, out, in, out. In, out, in, out, in, out, in, out. 100%. Can't go wrong with 100% strike rate, can you? Right, I've got to go, because I've got to go off and do stuff with the family today, because it's Easter. So we're back at 2:20 for this afternoon's New York session. We'll look at the DAX, the Dow, etc., etc. Hopefully this Dow will have just collapsed by the time I get back, but if it hasn't, I might be in a bit of trouble on the funded account. We will see. Not that one, the other one. Meh. So yeah, we'll have a look at this afternoon. We might get some ADR hits today. We'll see. At the moment, the market seems very unimpressed. London is not moving in any way, shape, or form to the levels I thought it was going to today. So we'll see. We're early on in the session, but we'll have a look at everything this afternoon. We'll see if there's any RSI extensions to look at. We've got a new one on the pound New Zealand. It's just triggered there. Obviously, the wrong way for me, but so yeah, pound New Zealand's extended to the upside, so there's a short opportunity there. So we'll have a look at those, see how we get on. But yeah, carry on doing what you're doing, and I'll be back this afternoon at 2:20 for the New York session, and hopefully have a load more money in the bank. But we will see what happens. Any questions? Come in the Telegram group. I won't be there this morning, but I will be there later. So just ask away in there. There's loads of people in there who can help you, like the Armand, for example. So yeah, anything you need, let me know. I'll be in there. Otherwise, I will see you tomorrow morning, 7:50 for the Frankfurt session. And if you're around this afternoon, 2:20 for New York. All right, have a good day, and I will see you guys later.